Uganda now, the country's central bank has issued its first Islamic banking license, and that move comes months after the nation passed legislation to accommodate Sharia-compliant finance. Well, as Leon Senyankana reports, it could usher in a significant growth for Uganda's economy.
A first for Uganda's banking sector. Salam Bank, a unit of the Djibouti-based Salam African Bank, will within the next year roll out services based on the principles of Sharia law.
There are certain things that conventional banking may not be able to give, but Islamic banking will be able to offer that. So that will also contribute to the amount of investment that we'll be doing.
The Islamic banking system doesn't charge interest on loans. Instead, it works on a system of profit sharing. Those taking out a loan from an Islamic bank will pay the money back and give the bank a share of their profits. Currently, interest rates in Uganda average about 26%.
In Islamic finance, money is actually seen as a medium of exchange, a store of value, and a unit of measure. So every kind of financing that is done from the Islamic perspective is done on the basis of risk and return sharing, meaning it's actually a partnership.
Uganda's approach to adopting Islamic finance has, however, been slow. Islamic banking was introduced in Uganda more than 2 decades ago, and financial institutions could only offer Islamic banking services under restricted licenses. But the lack of proper policies to regulate the sector meant even though Islamic banking was accepted, it did not catch on. But in June, Uganda's parliament voted to fully authorize Islamic banking and to amend tax laws to become compliant as well.
And that was the issue of whether or not, as a secular country, we should have a central Sharia advisory council at the central bank. Now, when there have been ongoing discussions about this. Unfortunately, the disruption of COVID put a halt to the discussions. But once we came out of it, the discussion began in earnest.
The amended law maintains the central bank's supervisory role and eliminates the establishment of a central Sharia advisory council. With the changes, analysts say, will make it easier for Uganda's nearly 7 million Muslims to have access to finance.
There are also a lot of people of the Muslim faith that are not borrowing because the current credit products available to them do not subscribe their faith. So they're keeping their businesses small because they cannot access capital to grow them.
Uganda's banking sector is largely private. Financial experts predict that the success of one banking institution could open the door for others in the country. Sharia financial assets are pegged to reach $3 trillion in value globally in the next 10 years. And Uganda is hoping its nascent Islamic banking industry will be part of that growth story. Leon Senyankana, CGTN, Kampala, Uganda.